Well, I hope everybody had a great Thanksgiving holiday yesterday. The markets had a nice little finish to the week here this week, kind of a post-Thanksgiving. We've traditionally Thanksgiving, that Friday after Thanksgiving, is a pretty non-event. There has been times, most notably in 2021, where the markets really dropped pretty significantly in that half day of trading. But today is actually, it was a little bit of a significant move. Again, considering that it's normally so flat. But it was a pretty good move to the upside because we got a new record high today, and I'll talk about the significance of that and new all-time high. That's a very significant new all-time high today. I'll break that down a little bit more. Remember as well, also too, that it is Black Friday, and we have our Black Friday sale going on at Market Scholars as well as our most popular sale. I'm going to break that down here a little bit later, but it is, it's 20% off of our premium services. It actually works out to being 40% off of our monthly subscription rate for our plus subscribers who do not get access to all the premiums. So again, this is why it's our most popular sale that we have. We do every year. We've done this sale now for like 7 or 8 years now since we started our company. So take advantage. If you've been thinking about joining Market Scholars anytime throughout this year, this is the time to do it. So take advantage of that. Use that link. If my pinned tweet as a reply in my pinned tweet, you can get information, a link to be able to use that, as well as email us if you'd like any more information on make sure that you're putting in that coupon code right and getting the proper discount. Let's go ahead and get started. Today is Friday, November 29th, 2024. This is the Market Outlook from MarketScholars.com. My name is David Settle. Before we get going too far, I invite you to subscribe to our YouTube channel. This icon here, the red subscribe button down below. Click the thumbs up icon to like our video. Comment on anything that stood out to you today. Join our website at MarketScholars.com with our Black Friday discount sale that I talked to you about earlier. I'm going to show you, some more details on that here a little bit later. Follow us on Twitter for more content between the videos from day to day, and join our Market Outlook Facebook group that we've created. All right, if you're watching us on our blog, check out some of these other things over on the right, including our Market Outlook live videos where we take a look at old trades, see whether we should stay in them or not, get out of them. Come down to the bottom, click this heart. It opens up this tab. Hit that like button there. Same thing here. Click this thumbs up icon. It opens up this tab. Hit that, right here. Click that like button right there. Again, the more you do that, it helps get our content out to all of our followers on these platforms. So thank you to those who do that day in and day out. Those who don't, you can do right now while you're watching with one or two really easy clicks. Remember, there's our Black Friday sale up here at the top if you want to click on that for more information on that premium services. All right, let's go ahead and get started and take a look at the S&P 500 with the market forecast indicators. You can see we finished the day up with a new high, new all-time high. In fact, this is the 53rd all-time high of the year. This is the fifth. This is the year, the fifth highest year in history, in the S&P's history of how many new highs we've gotten, new all-time highs we've gotten in a single year. So big, with a full month to go, where we can really easily get to number 3 on that list, which is in the 60s. So this has been a pretty strong year, and I talked about this. It's one thing to have a good, strong 2023 where we came in to 2023 off of the low of 2022. Well, we came into 2024 at a parabolic peak. 2023 ended on a parabolic peak. So typically, because you have such a high basis, you won't have the strong of a return the next year. Not the case. We actually took off in 2024, and from that parabolic peak maintained bullishness for multiple months, and now you can see where we're at right now. So good move. With a month to go, we could really end up being one of our stronger bullish years. The intermediate line is still above the 90th percentile. We're above the market sentiment. Everything is bullish from that perspective. The near-term line, we are right around that 2.5% mark. You can see how important it is to be around that 2.5% mark when you're trending to the upside, because that's kind of the sweet spot. So we are right around that sweet spot. That's perfect. The near-term line is dropping, but it's still in bullish territory, so it's not an issue. Remember, we don't really look for that near-term decline until you break 60 for the first day. That hasn't happened. The momentum line did bounce up, so we had this intermediate confirmation signal that bounced up yesterday. Most likely won't turn into any, will most likely be temporary. Won't start a new near-term like this one here. It won't start a new near-term rally because we haven't ended the one that we're on. So don't, keep that in mind. I don't expect that we'll get this kind of move again, just because, this was an intermediate confirmation signal. But it does, produce a little bit of bullishness, at least for a day. If you look at the Nasdaq 100, looks very similar, except for the intermediate line is not above the 80th percentile, nor is it above its market sentiment line. And also the near-term line is also not above the intermediate line either. So it's not nearly as bullish. We're nowhere near the new highs that we set post-election. So it's not quite the same for the Nasdaq 100. The Russell 2000, however, is still pretty strong, still hovering around its highs, intermediate line above the 80th percentile, above rising market sentiment, near-term line down, momentum line oversold levels. So that all looks really good. And then finally, your Dow Jones Industrial Average. When you look at it, its intermediate line above the 90th percentile, above market sentiment, that's falling, and below the 80th percentile, but still we're okay. Look at, again, new highs up to 45,000. We started the year down closer to 38,000. So, and we were at the end of last year at 35 going into. So it's been a good run for the Dow Jones Industrial Average. Remember, this is a little different than the S&P because it's not market cap weighted. It's price weighted, so it doesn't have the same leading stocks, like the Mag 7 aren't nearly as big of a weighting here in the Dow as it is in the S&P, and yet the Dow has been able to maintain some good strength for this calendar year regardless. All right, really quickly before I look at some other charts, I wanted to just quickly remind you about our Black Friday sale and to kind of show you this. I've been talking about this, but I wanted to actually show you. This is the email that we send out to everybody on our email list. The Black Friday sale goes through Monday, midnight on Monday. It is a 20% discount. We take our premium rate down to $2,800. That's a $700 discount. It works out to being about $77 per month. Most people who give you a discount on their Black Friday sale typically only discount like 6 months or a smaller time frame. We do the whole 3 years. The whole 3-year subscription is discounted to that rate. That's actually a 40% discount to the regular monthly rate, but not for our premium subscribers, because we only do the monthly rate for our Plus subscribers, which only get access to trading rooms. You don't get any of the access to any of the other tools and services that we provide that a lot of people really, really love about us. So that's why it's such a popular. This is why it's such a popular deal, because it's such a discount to even our normal non-premium rate. So make sure you take advantage of that. A lot of people have. A lot of people do every year. It's our most popular. We've been doing this for 7 years now. We've been doing this sale for 7 years now. It's where we get most of our subscribers. So if this is something you've been thinking about all year about joining us, now's the time to do it, because we won't do this again until next Black Friday. All right, now let's take a look at the weekly chart. As you can see, again, a good strong weekly candle here. Higher Hakiyashi close. Like we closed above the last week's high point. The PPO is at the 91st percentile the past 3 years, still at very strong levels. But remember, we already had our big surge coming off of the intermediate low point when this intermediate run started. That's when you get your biggest bullish candles. Then we kind of grind down, and that's kind of what we're doing. So don't expect like a series of weeks here in a row. It might be up weeks, but most likely will be more like smaller transition type candles as we head into ultimately the 5% decline that not here on this chart, but the 5% decline that we typically get once we get to these big strong numbers in these green boxes. The 5% or plus or minus decline, right? If you take a look at the market forecast weekly chart, again, you can see we finished with a very strong pattern. The momentum line didn't finish higher, otherwise we had another cluster. It's very small range, ended up being only 80 points. Remember, it's a 3.5-day range, so it's a big drop in the range. That's what kept the momentum line down, even though we closed pretty much right at the high of the range. The intermediate line still above the 90th percentile. The near-term lines bounced back up from bearish territory of this pre-election low point that we had. So everything is looking good from that perspective. When you look at the 3 green arrows, we have 3 green arrows across the board, except for on the Qs. Remember, that's the least bullish out of all the indexes. But at least we recovered the one of the 2 red arrows today, with the stochastics turning up, and that's how close we are to getting all 3 of them again on the Nasdaq 100. If you look at the 2-line version of this, we're above all these lines. They're all pointed higher. Everything, the MACD. Now remember, again, we're in convergence mode. We're not getting another surge. And if we do, then it'll probably be the ending surge like we saw in 2018. We talked about that in technical analysis, that a lot of intermediate runs can end on parabolic moves. Otherwise, you get your biggest momentum surge at the beginning of them, and then you just kind of grind out smaller momentum moves, legs, smaller near-term legs higher with less momentum as we go on until we finally peter out and we get our 5% decline. And that's the stage that we're in right now, is we're just kind of grinding up on these near-term legs that just gradually get less and less bullish. If you take a look at the DMI, some of these other oscillators, your DMI, you are back above 30 on the positive indicator, below 20 on the negative, so that's a good sign. You look at the RSI and the CCI, they're still at bullish levels. That's good, especially on the weekly chart, right? They're really bullish levels on the weekly chart, so that's looking really good there. Nothing too concerning. We are back to an intermediate strength trend on the trend quality indicators down here, so that's a good sign. Now again, I don't expect us to get back to mature levels because we never had a reset after the last mature bullish move, and this is technically still the same run. So we'll kind of keep our eyes on that. And if you look at, again, the Qs, which is weaker, we don't even have a weak trend going on right now on the Qs. And your rate of change, you're closer to these lines, your rate of change isn't nearly as bullish. So you can see the relative weakness there. And then finally, looking at the Bollinger Bands, you're barely in the upper quartile of a band with it starting to show declines. The bands are moving towards the Keltner channel. You are not above the Keltner channel, and you're especially weaker on the Qs, right? The Qs, you can see the bandwidth is falling more rapidly. We're not in the upper quartile, and we're nowhere near the Keltner channel, top of the Keltner channel, and the momentum is falling stronger. The bands are a lot closer to getting a red dot on the Qs. So things we're losing that bullish momentum. That this mature intermediate run that we've been on is kind of grinding away to a close here. Whether it's next week or the week after, it's not going to close on Monday, but you can kind of see how we're grinding towards the close on that. All right, let's take a look at the intraday chart. You can see we did get a higher high and a higher low, closing above yesterday's high, closing still well above last week's high, so very bullish from that perspective. We still have a very bullish Arun indicator, though not on the Qs. Both lines are going to be below 30 next week, and the range is already really tight, and it's going to get even tighter when by Wednesday when we move up the low point to there. So you can kind of get an idea that, again, that's kind of what happens when you get mature. You start to get really tight 4-week ranges, and that's what we're going to have unless we get a big breakout move on Monday or Tuesday. This is going to really drop pretty rapidly on Wednesday. If you take a look at the volume and the ranges I showed you before, very low, below average, but that makes sense on a holiday like this. The normalized ATR is right in that sweet spot, perfect, right where we want it to be. That's nice trending, and so is the VIX. The VIX is also in a nice sweet spot, below 15, below 90%, but right around the 85% mark. The VVIX is below 90 at 86. Everything is looking really good, and you can see how strong the correlation is between the VIX and the VVIX. So everything looks to be looking good there. One little hiccup, and that is the skew. The skew is at very, very extremely high levels. For 3 days in a row now, we've closed above 165. We've only done that once before this year, ever, and that was in 2021 when things just went crazy from a breadth standpoint. But here we are again, with multiple instances here in September when we had these, we had some Hindenburg omens back in that range. Remember the Hindenburg omens that we got back over here in in September. We had one again here just recently in November, and you can see where the skew is reflecting that there is some concern in the markets right now. You can see that Hindenburg omen coming from the jump and the new lows that we had over here on above 72. It was right there, 73, and a couple of days there at 73 in November. So one of them turning into a Hindenburg omen. And you can see the lows now below the average, not as high as they are, but you can kind of see where the concern is, right? We are not nearly as bullish as we have been, and we're back below the average there on the number of new highs. The number of stocks over the 50-day moving average still at 350, but we're going to see, as I've showed you earlier this week, that when we get this surge of breadth, that it might be like that last surge before, like we had right over, let's see, where was that? Right over here, right before the intermediate decline started. We had, that's where all this, we had weak breadth, and then boom, we had like really good breadth, and then the run ended. Like, really good breadth on an already mature run, and here we are again getting really good breadth on an already mature run. Are we signaling, again, that we're grinding towards the end, and that seems to be the case. All right, if you take a look at how we did today, you can see foreign stocks actually did the best today. Developed in particular did really well. The S&P 500, the Qs were higher. IWM ended up finishing pretty close to where the S&P did. Gold did really well after struggling here earlier in the week. The dollar flat. Commodities giving back their little gains that they had. Emerging markets really started the day off pretty weak before rallying into the end. Let's zoom out to the week that was. So 3.5 day week, right? No Thursday. But you can see bonds had the best performance of the day, of the week. Real estate also second best performance. You can see equities were up, but lagging behind bonds. So it's not very common in the good bullish strong week that stocks underperform bonds, but that was the case this week. The dollar, the Nasdaq 100 lagging behind the S&P, which again usually doesn't happen on good bullish weeks because that's a big weighting of the S&P is in the Nasdaq 100. The emerging markets flat on the week. The dollar was way down this week. So let's take a look at some of these charts and look at how they look like for the week here. So we'll go to a 5-year weekly chart. And you can see the dollar, big down week, still above its 8-week moving average, but you can see the MACD appears to have peaked, the histogram appears to have peaked. We also talked about bond yields and the move that they made. Well, let's look at commodities here really quick on this one, and how they perform. Remember, their commodities are below their 200-week moving average. The 8 and 17-week week averages are below the 30. Like, we have been in a decline on commodities and continue to be the case. That stochastics is rolling over. The MACD looks like it's rolling over as we bounce back down. We tried to make a run up last week, gave back a lot of those gains here this week. If you look at crude oil, which is a big component of that index, you can see it's also below all these averages. The 30-week is crossed below the 50. Everything's below the 200 weeks. So, I mean, these are like bear market levels for commodity prices. That's not typical of a strong equity market like we're seeing right now. If you look at the 10-year yield, you can see the bull tags that we've been getting as we continue to move lower. Look at the weekly version of this chart, and you can see, again, we had a bear tag like we were going to bounce up. We got dark green shading. We never did get the green line as the near-term line is crossed back below the intermediate line. The intermediate line is down. The momentum line is back down to extreme lows. So a big drop in yields. Now, typically, yields and stocks, if you look at their season or the correlation with each other, you can see, like, for example, bonds and stocks, they have a positive correlation right now. They're both going higher, and that's very atypical lately. You generally like to see yields and stocks move together, but right now bonds and stocks are moving together, as that's been quite the flip from its typical negative correlation that they've had here. So kind of an interesting move as bonds have really taken off. Like I said, on a week that ends up being a bullish week, it's very rare for bonds to outperform stocks. But there you have it, bonds jumping up to the 200-day moving average, jumping up to the point of control. Now, there's heavy resistance here, so it's unlikely it's going to make a strong move higher. So it's going to be really interesting to see how the bond market reacts here next week, especially to the jobs numbers that we'll be getting throughout the week, and how that impacts rate cut odds going into 2025, as the odds have increased for that last rate cut here this year in 2024 in December. As you can see, the odds are up to 2/3, or 66%. That's kind of where we've been the last couple of days. and the odds have ramped up a little bit for another cut in January, but you can see how big of a drop that is. So after being at 100% for a good chunk of time, the odds there have really come down significantly, to the point where, again, there was a 100% chance, or close 90 some odd percent chance in September that we would have cuts all the way down here to 3.25. But now it's only a 1% chance that we have that. It's only a 10% chance that we get would end up being 2 more cuts this year, and really it's only a 75% chance that we even get 1. Again, it was clearly 100. And now it's only a 75% chance that we'd have 1 more cut by next June. Most likely that's going to get to 0. I think it's going to get to 0. We're going to get 1 more cut in December and then no cuts in 2025 until we get to June, and probably start pricing in more cuts later. But I think that's actually the best case scenario for equities, as these yield spreads, which have been rising, stop rising. Once they stop rising, in the case of the 2-year and the 10-year, go negative again. Look how close we are to going negative again, and then the 10-year 3-month getting down to deeper negative levels where we've been for the last little bit. I think that's very bullish for equities, as we've seen in 2023 and 2024. It's very bullish for equities to have these yield spreads negative and falling, and that's been the case, and that hopefully that's the case for at least the first 6 months of next year. Because once we cross 0 and we get back up to here, that's because the Fed has been engaged in a big rate cut cycle, which it has only historically ever been engaged in an extended and deep rate cut cycle when there's been a recession or a bear market. And now, like I've said before, in December, what's going to be most important about December is what they do here, what their dot plots are. In September, they pretty much told us that they were expecting a recession in 2025, that they were expecting to cut rates all the way down to at least between 3.25, 3.5, if not half of them to 3 to 3.25. So 225 total basis points of cuts. So that's recession level type cuts. Obviously, they would never say that, but that's historically the only time they've ever cut that much, is whenever they've been in recessions or bear markets. So in December, as we get the new dot plots, it'll be bullish for equities if the Fed themselves feels like they don't have to cut rates nearly as much in 2025 as inflation level, as the employment sector stays strong, inflation starts to pick back up a little bit, right, up towards that 3% range, which is what is actually expected to do here when we get our data in 2 weeks on the CPI. Let's take a look at how the sectors performed here today. Again, it was a good day for technology after not being a good day yesterday. It was on Wednesday. It was a good day for technology today. Discretionary came up and closed too at the end on a Black Friday. You can see real estate did okay until the very end of the day. But let's go out to the week the full week, and you can see technology. The reason why we bounced today is because it was so weak yesterday. It's a big decline lower. It's lagging. For the week, it lagged behind everything. That's not the kind of week we want to see from the market leadership right now. And so when you take a look at that XLK, especially relative here, let's go here to XLK relative to, let's go to this chart. Relative to SPY, being below that 200-day moving average and being below all these averages, and now the 30 crossing back below the 50, we want to see renewed strength and a move into XLK to move back up. Right now, this is not the pattern we want to see, where your big cyclical areas are moving down to the left, and all your safety trades, healthcare, staples, real estate, utilities, are all moving pretty strongly up and to the right now. All right, and that brings us to our trade of the day on Las Vegas Sands here. You can see its market forecast is showing a new dark green shading and green line pattern today, intermediate line crossing above 50. The near-term line is up above the intermediate line. The intermediate line is still below market sentiment, but you can see it's making a run up to the upside there. We've been on this near-term rally for a while. It's a very strong move here today. It was a very good week today for Las Vegas Sands after having this intermediate decline. You can see it's rebounding here eventually. rebounding here with a good bullish pattern, right? So here, let's, there we go. Oh, there we go, finally. Nice good bullish pattern here, back to, after having bearish candles, back to having a pretty strong bullish candle. So that's a good move for the stock. Looking at the 3 green arrows, obviously we have a set of 3 green arrows here the past couple of days, 3 of the last 4 actually, with some pretty decent volume. Again, considering this was only a half a day of trading, right? When you look at the 2-line version of the 3 green arrow charts, you can see that we are above all these moving averages, above the point of control, close to the top of the value area. MACD and stochastics rising at bullish levels. When you look at the DMI is also showing a bullish pattern above 30, above 35 on the positive indicator. Sorry, I don't know why this is taking so long. Above 35 on the below 20 on the negative indicator. If you look at the RSI and the CCI, bullish levels, back to being at bullish levels there too. The Ichimoku cloud and the trend strength indicators. Again, we had lost our bullish trend. We had a little bit of a reset. We're back to a weak bullish trend above the cloud, above the blue line. Positive rate of change again. The Bollinger Bands and the Keltner channels, when you look at them, we are back above the upper band, just barely, but above the upper band and above the upper Keltner channel with a red dot. And looking like we're going to switch the green dots here with a move from negative to positive momentum. So it's looking like we're getting the start of a new run. So I decided to come down and sell the low 20 deltas. So sell the 57, buy the 55. This is what it looks like, especially when you do position size for what we do, $500. Gives us almost about a 2.5 to 1 reward to risk ratio. So let's go ahead and right click, confirm and send, and we'll send that into our market outlook category. And that's our trade for today. Alright, well that does it for today. You've heard from me now. Now I want to hear from you. Use that link popping out in the top right corner of your screen. That takes you to our Market Outlook forum. Open up any new thread with any questions or comments you have. Reply to anybody else's thread, and let's keep this conversation going in between videos. Again, thank you very much for watching. Remember to subscribe to our YouTube channel. Hit that thumbs up icon. Comment on the video. Join us at MarketScholars.com with our Black Friday discount, our 20% discount. Again, a very, very good discount there. That wraps up on Monday at midnight. Follow and like us on Twitter and Facebook as well. Have a great rest of your weekend, everybody, and we'll see you all on Monday.